Thanks for joining, everybody. There is a huge number of people joining us today, so I am just going to give and talk very slowly to give people time to join, because people are still filtering through. It does tend to take a couple of minutes when we've got such high attendance numbers, so we will kick off probably in another minute or so. A little bit of housekeeping. One, we are all at home, so please bear in mind that there will be home noises. I have a dog that's taken to barking every single webinar that I do, regardless of how many instructions I give him. There are children, there's husbands, there's everything around us, so please excuse the fact that we're not sitting in an office. There is also a chat box, so down the bottom of the screen you'll all be able to just chat directly to us. As we go through this session, we're going to try and cover off everything that we think you want to hear, but of course please stick your questions in there. I will cover them off at the end once Hannah and Andrea have both finished chatting. Right, there's still people coming in, but I reckon we probably start with the agenda. Han, can you be slide?
Hal, do you want to just try your video again? It should work now. You're a co-host. Yeah, okay.
There we are. Thank you very much. I have the power. Right. You'll also see that I am in bed, so apologies for that, but we're working from home. You know, we're on those terms already. Okay, dokes, if we can go to slide 1. So this is, there's quite, the agenda, Han, can you go back one? There's a lot to go through today. We are really conscious that your time is super precious, especially at the moment. So we're going to try and get through this as quickly as we can, but there's some really important pieces in here. We'll do a really quick introduction so that you know who we all are. We'll then move into, and Andrea, who's from Swoop, who I'll introduce shortly, is going to go into the market overview and try and break down, you know, the facts from the fiction and give you an update on what the lending marketplace looks like in this current world. And then also go into the pre-application considerations. We're then going to move to Hannah, who will go through completing the application itself and creating the collateral that's required. Back to Andrea, who will then talk about submitting the application itself, before I will then kick off the open Q&A. There is no question off limits. We will try our best to answer them all. If we don't get to them all, I will obviously then contact you all afterwards, and then we'll move into next steps. So quick introductions if we can. Next slide, please, Han.
Sorry, I'm rubbish at slides. Here we go.
So, I mean, you can see us all in real life. We can't quite see Andrea, but behind the shadow is Andrea, who is the CEO of Swoop. Andrea, do you want to just give us a quick 2-minute introduction to who Swoop are and your role?
Sure, yes. My name's Andrea Reynolds. A bit of background on my career. I was a chartered accountant with KPMG for many years. Left the London office, set up a corporate finance advisory firm, and a few years ago I decided to try and automate the function of corporate finance, not just automate it but try and scale it so that SMEs could have access to similar services without having to pay the huge fees that go alongside that. Launched Swoop funding in May 2018, have been recognized by the banking industry. Both we won the Open Banking Challenge and received funding from the RBS Bailout Fund. And the CMA has mandated all of the 9 major banks to integrate with us and to advertise us on their business banking websites so that more SMEs can get access to the funding and better costs, better charges than they have been in the past. We're now working with Futrli because both of our propositions combined can solve a lot of problems for SMEs and for accountants helping SMEs.
Okay, brilliant. Thank you. And finally, Hannah, you've got there in the middle of the screen, is CEO here at Futrli. Hannah, do you want a quick 1 minute?
Say hi. I mean, yeah, CEO of Futrli. You're going to see, if you're not familiar with what we do, we are going to help the application process with 3-way cash flow forecasts that you can actually amend and update with all of the considerations that we need to think about with the CBILS applications, but we're going to come to that. So yes, absolutely passionate about getting our small businesses help and funding where required. So without further ado, let's move over. So Andrea, if you want to just give us a guide to the market overview.
Sure. And this is just a quick synopsis of what's gone on in the market since the announcement by the Chancellor. So you're all probably aware, once the Chancellor made the announcement, in terms of who the accredited lenders are, there's over 40 of them, and all of them were chosen because they were also the lenders of the Enterprise Finance Guarantee Scheme that I'm sure you're all aware of. To give you an idea of what's going on, there's been over 130,000 inquiries about CBILS, and unfortunately there's only been 983 approvals with a value of 90 million in lending. So if any of you have been struggling with getting your applications processed for your clients, or just generally finding it difficult to communicate with the banks, you're not alone. It's been pretty chaotic the last few weeks, but we'll start talking about how we're beginning to turn the corner on that. Lenders themselves have been struggling. You've probably gone on their website, you've probably seen that they're open for business in terms of CBILS, and then when you go to apply or go to look for a relationship manager, you're not getting anywhere. Behind the scenes, what's been going on is, because we talk to the lenders every day, they too have had business continuity issues. So the majority of them have customer services teams in India who would normally field inquiries. All of India is in lockdown. So they've lost this huge swathe of capacity within their business. They had a new product announced on them. They agreed it on a Sunday night, and the next day it was announced. And suddenly they had this influx of demand with nothing really figured out. Most of them are saying in the next 2 weeks they feel like they're going to be able to start dealing with backlog. So we will talk about that further in the presentation. And just to say that today the Chancellor is making a further announcement on the CBILS scheme, mainly because of the huge outcry from every corner of the industry in terms of how bad this is being operated at the moment. We already know what some of those announcements are going to be. I think the more important ones that we need to talk about are the good news for your clients is that there will be absolutely no personal guarantees allowed up to £250,000. Anything over the £250,000, it will be 20% of the balance can be sought in terms of a personal guarantee. We'll go into this in more detail in the presentation, but that's the big announcement. The second big announcement, just to make you aware, is that if you have been struggling with whether you're eligible or not, whether your clients are eligible or not, there was this real issue on, first of all, you had to prove that you couldn't get lending on normal commercial terms, and then you could go for CBILS. That's changed as of today, as of the announcement that the Chancellor is about to make. And some of the banks have already started to implement this today. You can literally just go for a CBILS loan now. You don't have to go for a normal loan, get rejected, and then be offered a CBILS loan. So that's what we know today. My phone's buzzing at the moment because lenders are getting in touch saying what they're doing in relation to the announcement. Some of it's good news for some, bad for others, but we'll talk more about that, I think, as we get into the presentation. That's just a quick catch up on where we're at today.
Hannah, you're muted.
I know, I just realised, sorry guys. So Andrew, when we've been talking, there are pre-application considerations, weren't there, that are really important for the CBILS applications. We all know that there's different relief methods that the government has put into play. But I think it's through our conversations that we've been having in your close contact with all of the lenders that this information has come to light. Do you want to just talk to this a little bit?
Yeah, I guess the best thing that we can do while the banks are sorting themselves out is actually get ready and help them to execute faster. So some of the things to pre-assess, I suppose, before putting your client forward, the basic eligibility first and foremost, most basic being making sure it's a UK trading entity that's at least a year old, that's been profitable, and that turnover, the revenue from trade, it must be at least 50% from trading. So if it's investment income or anything like that, that won't count. It has to be 50% at least of trading income. And then in terms of getting ready, so what you have to say is that my business has been impacted by COVID-19. I was a viable business, and that viable business date is December 2019. So I was a viable business, this has occurred, and this is the impact on my business. So there are certain information requirements, and you might look on Lloyd's website and it'll say, oh, all you need is your P&L or whatever. That's not true. If you really want to get this through fast, then there's certain things to do. They're looking to see, have you taken into account all of the other government relief schemes before you look to civils. So when you are preparing the documentation, it will be about, have you put the VAT deferment in place? Have you looked at perhaps time to pay with HMRC on PAYE, NI, corporation tax? You don't necessarily have to have done that when the time to pay one. It's just I would be doing it because they have made the offer. They have given a helpline that you can call to do that. The next one is, have you availed of the job retention scheme? Have you taken into account the business rates relief, if that's applicable? And are there any other grants in terms of, retail, leisure, hospitality, in terms of the £25,000 grant that the Chancellor announced on budget day, or the 10,000 if you're not in those sectors but still fall under small business rates relief? The other thing they'll be looking at is, have you maximized your cash flow as much as you can by talking to your suppliers, getting deferments in place, deferring rents, etc. So in terms of, could you apply without doing all of this? Yes, you could. Are you slowing up your application? Yes, you are, because you're better off showing them that you've put everything in order. You've worked out your cash flow forecast from that perspective, that you truly understand your cost commitments over the next at least 6 months, if not 12. That's what they're looking at. You obviously will have to make assumptions about revenues. They're not particularly focusing on the revenue line. They're saying, yes, show us how it's been impacted. What they're really focusing on is, does the business have a handle on what its cost commitments are for the next 12 months? Because that's where they'll be making their assessment. They'll also be making their assessment on what your EBITDA was by December 2019, or looking at your previous year, depending on when your financial year falls. And that's the number that they're focusing on for your affordability ratio. So not what it is right now, what it was last year, what your cost commitments are for the next 12 months. If we include in that your repayments that will have to start coming out, that you can still sustain the loan. I don't know, I'll go into it in the next few slides in terms of some of the other banks and the loan types and what's going on. But that's kind of the things to consider before going to a lender with anything.
Yeah, and it's just, I think it's just this real clarity over the fact that this is about preparing clients for the best possible outcome that they can have, and not being led to believe that, we've all, applied for bank loans in the past beforehand, and they absolutely need 3 years worth of information. And so it's, as much as the COVID trading as well, we've got to look at that for the next 6 months, I would advise, not 3 to 4, because we just don't know. But then what does the business look like post that as well? So it's this, coming back out and recharging itself after that point. So the things that we're going to go through later, you'll see how all of these adjustments can be made in a very, very, streamlined and efficient manner. So if we skip forward, so the loan types, sorry, Andrea, it's the Andrea show, really. We kind of like drew people in to go, but actually it's such good information, because it's not freely available. And unfortunately, even if you go to the business bank's the British Business Bank's website, you can see all of the different lenders there. It's such tight, non-detailed information that you're getting. So, to have you with the bat phone is brilliant.
Yeah, Yeah, this is a quick run through to give you an idea of what's actually happening on the ground and just to give you an idea of the products. So there's typical term loans, normal business loans and asset finance CBILS. And you can elect to have a repayment period of up to 6 years. With invoice finance and overdrafts, which are also available under the scheme, you can elect to repay over 3 years. There is no early repayment charge, so you can elect to do this so that you can improve the affordability ratio that they will be looking at, but you can choose if life gets better and you recover faster, then you can choose to repay early. The typical rates that are announced, and it's important to talk about this because you may have seen all the news stories about 30% interest rates, etc. And these were actual letters that Barclays sent out to customers. Now, the CEO of Barclays SME Banking has since come out and said, oh, it was an error in our pricing model and it was an automated letter, and it's absolutely not true. Whether it was true or not pre-today, it will certainly not be true after today, because the Chancellor has spoken to all of the banks and they have to offer affordable rates. So Barclays are now coming out and saying their rates will be between 2 and 5% above base rate. HSBC have just announced literally about a half an hour ago that their rates will be typically 3.5% to 3.99% above base rate. So this is the range that we're seeing and what they are all now coming out and confirming, because the Chancellor has asked them all to be very transparent on the interest rates. I think that's really important. The next thing is they're not all talking about this, but we have seen already from Barclays that they're offering capital repayment holidays for 12 months. So we're assuming that the other banks are going to follow suit, because in other words, there's no point in giving you the cash and then they're taking it back out. The point of it is that it's supposed to be going towards keeping, safeguarding jobs, safeguarding the business so that there are jobs for people to come back to after furlough. The next thing to just be very clear about is that the government is covering the first year's interest payments and the arrangement fees. And that's another key point. So what Barclays are saying is, okay, the government's taking the interest rates and the arrangement fees, will give the capital repayment holiday. So between the two, hopefully you can use this to really survive the crisis. The next point to make is, because you're all probably aware of the EFG scheme, you're wondering, does it come with that premium that usually is charged on EFG loans because the government is guaranteeing the loan, or 80% of the loan. In this case, there's no government fees. There won't be after the crisis. It's for the term of the loan. There will be no government fees charged. So what you're typically looking at here is getting your loan, no upfront fees, no interest rate fees for 12 months. And I would certainly be asking for, and in most cases we're seeing, no capital repayments for the first 12 months as well. As we just touched on before, no PGs up to 250,000, and then 20% of the balance above 250,000. They'll be looking at, does the business have any other assets? And I think the most important announcement, as I just to reiterate, is it's not that this scheme has been expanded out to say any viable business that has been impacted by COVID-19 is entitled to apply for this. So no having to prove that you can't get lending anywhere else in the market. The general rules are as well that you go and you ask your bank first, and then if they reject it, you can go to other lenders. Again, we'll talk about that in a little bit more detail further on in the presentation. But they're the general terms of what's being offered.
Just a quick one. There's so many questions. I promise I have just reassured everybody that I will go to them all at the end.
We've got a full section for Q&A, haven't we?
But EFG, loads of people don't know what EFG is. So can we just clarify?
Oh, sorry. Yes. It's a loan scheme, a government loan scheme that has been around for over 2 decades. It's the Enterprise Finance Guarantee Scheme. And you're all probably sitting there thinking how wonderful of the government that they've come up with this CBIL scheme and they've set 330 billion aside. That's not the case at all. This money has always been set aside for the Enterprise Finance Guarantee Scheme. The government's not actually setting anything aside. They're just saying, we, as the last resort, you as the lender can come back to us if your client defaults and you cannot retrieve the funding. Otherwise, you can come back to government and government will pay you 80% of the defaulted loan. So what I'm saying is, if you'd heard of the Enterprise Finance Guarantee Scheme, CBILS is set up exactly the same way. The only difference is government is covering the costs of your arrangement fees, your interest payments for the first year, and they're not charging you for that benefit. So that's what EFG stands for.
Super. So there is a full Q&A section towards the end, which is why we're going to try and give you as much of the information up front so that we've got as much time for questions and answers at the other end. So completing the required forecasts, of course you can do it in Futrli Advisor. What you're going to be getting, the final slide, we're going to tell you what the next steps are, but you're all going to receive an email with collateral in it to help guide you through this process. So in consultation with Andrea and Swoop, I've put together a 10-step CBILS PDF guide. It's very detailed. It literally will do step by step the things that it will cover with the accompanying video. You can see the chapters here on the right hand side are every single one of the adjustments that you might want to make within the thresholds of the things that Andrea has already covered over, so that you can just step by step go through the adjustments, going through staff and entering those, so that you can then very easily, if any of them do need to claim sick pay, for instance, or if they're going on to furlough. There, we can see you, Andrea. And the furlough scheme, and then it will take you through the kind of questions that need to be asked as you're preparing a 3-year forecast anyway. But it's all step by step. It is easy. Of course, everything's easy when you know how, but it genuinely has been set up so that you don't need to memorize any of this. It's handheld all the way through. So I'm not going to spend too much time on this, because you're going to get all of this collateral for you to go through with your clients and your team, to enable your team as well. So it's not just you with this pressure, as the lead partner, for instance, in the firm. So all of that's going to come through after this afternoon at some point. Okay. So the application submission process by Swoop, we're so thrilled that we're working together, because I think we care about small businesses a lot, and so yeah, back to you, Andrea. We were just saying.
Yeah, no problem. Again, if any of you have attempted already to submit an application, the main routes at the moment are, you go on the website and they say contact your relationship manager if you have one, or fill in an online form and then they will get back to you. The problem is trying to get in touch with that relationship manager and submitting the online form and then waiting to hear back, or getting a fast rejection and not understanding why. So what we've done is combine with Futrli, where both of us work together to absolutely define all of the criteria. Swoop, because our business as usual is about working with all of these lenders, both bank and non-bank, it's just part of our job every day that we're updating all of the application criteria, all of the information required. What we do then is, once you're ready, by using Futrli's fabulous tool that we've worked on, is then to be able to know how to apply, where to apply. And so this is what we built because we're integrated with all of the banks. So for example, Barclays is using its eligibility calculator to do the initial assessment. We've integrated with that, same with RBS, etc. So what we've done is combined every single lender's details, and then what you can do is quickly build your client's profile on Swoop. And if you want to just click through the journey, so it'll be a quick link from your Futrli into Swoop. You can then, if you want to integrate the accounting software again, so that we can pull the analysis that we need for you to be able to present to the lender in terms of proof of impact. In addition, you can do that either via your accounting software or the bank account. One of the information requirements that they have is 6 months bank statements. So if you want to do the integration to open banking, we can pull the statements from there and automatically deliver it to the banks. It's really how you choose yourself. If you've built everything on Futrli, you can just come on board and build a profile manually. This is just to speed up things on the Swoop side. If you want to click to the next screen. So all you're doing is building the profile, talking about how much funding that you are looking to receive, write a brief impact statement on behalf of the client. And then what we're doing is pulling all the analysis. I'll give you an example of some of the analysis. Most of them are saying, and we will confirm this today post the new announcement, but typically the maximum loan that you can go for is 2 times the annual wage bill. So if the business is greater than 2 years old, you would go for 2 times the annual wage bill, or 25% of your turnover. If you're a year old, then it'll be 1 times your annual wage bill. So what we're doing is pulling this information, working out the calculations that the lenders want to see, depending on which lender it is, and then matching you off to the lenders. The first port of call will be the bank with which your client is banking with, and then if they reject on any grounds, it will automatically go to the next lender in the platform that we know most suits the criteria and the profile of your client. So what we're trying to do, if you want to click on the next one, just to show you what your screen will look like in real life, it's essentially showing you who the candidates will be for your customer. Barclays coming up because Barclays would have been your customers, your client's first choice, because that's who they bank with. But it's then looking at who the other lenders are that would be ready to take this on should the bank reject. And so you don't have to worry about reapplying or getting the information ready between Futrli and ourselves. We do all of that for you. We do the heavy lifting. We get the responses from the banks faster because we are already integrated with them. We're already working with their teams. And they like us because we're helping them triage applications. So it's taking a bit of burden off them. So as I say, it's just to speed up your decisions. Then once you get the eligibility pick, what we're looking at here then is uploading and making sure that we have all of the information that they're going to require to process your application, and you'll have built your cash flow forecast on Futrli with all of the different points that we talked about earlier, so that the bank doesn't come back and say, oh, could you just readjust this for, your VAT deferral, etc. We're doing the work for them. So I think combined together, we're hoping that we're doing the heavy lifting for the banks and doing the heavy lifting for your clients so they can get the access to the funding faster.
Amazing. Helen, I'm going to hand over to you for Q&A. I'm going to pause the slide share. I'm going to pull up some features so you can actually get a feel for the forecast and how it looks and all of those things, but I'll do that kind of after stop sharing.
I've actually had loads of questions about how they do it, so if you could, that'll be really handy. Get warmed up while Andrea, all of the other questions are aimed at you, so grab a glass of water. I'm just scrolling up through them. Okie dokes. I'm going to start right at the top. Do we know if lenders are still only taking on their own account holders?
Yes, technically that's what they're all saying. However, when we look at somebody like Barclays, we have an automated onboarding of new bank accounts with Barclays. That's one of the features we built with them. So they're saying, Yes, actually, technically, we are looking after our own customers. However, if you have an eligible customer that you're passing through to us and they want to open a bank account with us for us to be able to give them the lending, then we will allow that to happen. Just on this point, I'm staying on top of this point massively because it's actually against the Competitions and Market Authority order. So in business as usual, if a bank came out and said that, the regulator would be down on them in a millisecond. The CMA is watching this, and because technically they're not supposed to say you can only get a loan if you bank with us. That's saying you must bank. It's wrong, anti-competitive. At the moment, they're saying it's because we need to be able to deal with the deluge of applications. Once we get on top of that, we'll open it out. So as of today, yes. What we will be doing with Futrli is sending you all out updates. So as soon as anything changes in the market, you guys will be the first to know because Futrli will be sending you a notification.
Yeah, perfect. In the same vein, actually, is it correct that any arrangement fees will be met by the government?
Correct, absolutely. No arrangement fees, no interest rate fees for the first 12 months, no government fees either.
Is this a last resort avenue once a company has exhausted all other financial means? I mean, I guess we kind of answered that, but
it is. You have to show that you've thought about the other measures and that you've put those other measures in place. But what you're saying is, my business has been massively impacted. I want to apply for this. And so it now is a straightforward process. Before that, it was, I can't get lending anywhere else under normal commercial terms. So that's a big, big relief today to have that announcement.
Another one, which I guess is why they should come to you, but can a bank still decide to only give you a normal loan instead of a CBIL?
Up until today, yes. And I'm sure they're all quickly rewriting their terms and conditions. Yeah, but up until, so if anyone has an application in there and they're attempting to offer you a normal loan, say you are entitled to CBILs, because as of today, that's true.
Okay, brilliant. Many people have asked for slides. Yes, I will be sharing them. I'm sharing loads of stuff after this, so don't worry, we'll keep you. No. There was a question early on, and it was Fiona who did ask it. So hello, Fiona. She asked what number, and I think it was a number. It was when you were talking about the consideration, really early slides. It was like, what number is it that they're going to consider? She didn't actually hear what the number was. Now, is that enough information for you to guess what number you were talking about?
Do we, what number, as in affordability, or in terms of the value of the loan?
I don't know. Fiona, I will ping you off.
Even I would do cover both, Andrea. It's
On affordability, they're obviously looking for greater than 1 in terms of debt service coverage ratio. What they're actually hoping for is about 1.5 to 1.75 at best, and that's based on last year's EBITDA, so not what it is now, not with the impact. They're assuming that you'll get back to where you were as a business, and as I'm saying, so that's it in terms of if you want to look at affordability. So what are your interest plus capital repayments going to be after the 12-month period where the government is paying that? What would that look like? Divide that into your EBITDA for the previous year, and hopefully your annual repayments, your EBITDA is at least greater than 1 times those annual repayments, and hopefully is around 1.5, 1.75. If you're at that 1.5, 1.75, there is no reason for you to be rejected. If you are, talk to us. But minimum, it has to be covered by EBITDA. In terms of the value of the loan, first of all comes to affordability, and then second, they're trying to maximize it 2 times your annual wage bill or 25% of your turnover. This rule, again, I'll be checking out today because it's up for discussion at the moment. So we're waiting for confirmation on that.
Brilliant, thank you. What if the business was in existence for less? And obviously the first year, 2019, was not profitable, but current year is to be profitable?
Oh, that's a good question. Technically, the rules are saying, well, if it was profitable this year, as if you could get a set of accounts up to whatever date it started to be impacted, so at least up to December 2019, and you can submit a set of management accounts that shows a profitable business, then you will be eligible.
Okay, perfect. I tried to use, I think we've answered this, I tried to use NatWest, who we have a current loan with, but was told I need to use Barclays, which is my main bank.
Okay, yes. So that's funny that NatWest are sending you to Barclays. That's very unusual. But so Barclays are considered your primary bank. Yes, that is true. They are trying to get you to go to. They're all trying to just bat away any inquiries until they can get a handle on their own processes. But yes, that would be the case. Again, happy to look at that one, get it to Barclays, get a quick answer so you can go back to NatWest.
There's a lot around the same, so I'm just trying to skip through them so that we've got...
What we'll make sure that we do with any of the questions is that we'll filter through them as well, and we'll probably add answers to them to the slides, so that, or to the email that you will get afterwards. Yeah. So we'll make sure that we do that offline as well. I mean, I think there's a couple of people have asked about profitability, and people, you know, so we're in the tech sector, we're, you know, it's yeah, you know, not many profitable tech companies, because if you're doing high burn, high growth, unfortunately, you're going to be, you know, it's not really going to be eligible for you, you know.
We're actually submitting a letter to the Chancellor today. We've been working with Tech Nation on it. There is nothing in any of the reliefs. I mean, furlough payments, yes, but tech companies are really, really penalized here. A representation has been made to government, and what we're expecting is over and above, he makes his announcements about CBILS, we're hoping that the British Business Bank will start to make more capital available, and that maybe they can distribute that through the alternative finance lenders or through some of the VC funds, because the government had already set aside a fund called the Patient Capital Fund, and this was about to be launched. So they do have a pot of money there, and it was set aside for tech companies who required patient capital to be able to scale. So we have a lot of representations in there at the moment to see, can that be deployed, because the tech sector is huge. But unfortunately, CBIL scheme is not for those types of companies if they're loss making.
Right, a slight break on Q&A because loads of the questions, Hannah, around Futrli.
Yeah, that's fine.
Then I'll come back to the other questions.
That's fine.
Keep them coming in.
No worries. So what I'm going to do is share again. Okay, guys, I'm assuming, can people see the screen? Okay. Yes.
Andrea, can you mute? They seem to have challenges with hearing if there's all three of us unmuted at the same point.
Right, you can just hear me. Okay, so I'm in Futrli Advisor at the moment. I'm making the assumption the video will take you through adding a data source. I'm not going to do that just now, but where you will head to the forecasts and budgets section. You're going to hit new. Prior to doing that, again, it's in the video, mapping your three-way forecasting accounts to make sure your accounts payable, receivable, VAT, etc. are mapped. That will happen automatically for the client as you're going through the process. So you'll hit new, and you're going to do a quick create from last year's actuals as a base, copy and paste the title in there, the CBILS application, put the business name in. We're going to do it for 3 years, starting from April 2020. In true Blue Peter style, here's one I prepared earlier. What you can see on the right-hand side is the guide that's going to take you through it. Now, this is mimicked, like I said, with the video. That is actually here. So you can see all of the different chapters that will take you through every single point here at the same time. Now, one thing that I'll do is just to give you a quick tour around. Say, for instance, the first point that you're going to want to cover off is VAT, that VAT deferment, because without the need for a time to pay agreement, all VAT during this period will automatically be deferred. So in the search in the top right-hand side, you can find the VAT account, which of course, as accountants will know, will sit under current liabilities. Obviously, small businesses not necessarily knowing that. And then the guide will do a step-by-step to go through, you know, exactly what you need to do down to in the formula bar type 0 minus, then search for VAT here. I'm not going to go through every single, the entire plan, but every single consideration that Andrea and myself have gone through regarding all of those relief options that the government have are set out in a very, very step-by-step manner. So what will happen is, sorry, I need to just cancel this out. It will take you through the VAT deferment. It will take you through the time to pay for HMRC's PAYE and National Insurance. You'll then go through creating staff. I highly recommend, as you're doing this, I think I mentioned it beforehand, but if you can, if it's just here under salaries, that you enter all of the staff for each member of your client's team one by one. Obviously, if they've got 50 staff, that's not necessarily very viable. Maybe do it per department in that case. The reason that I'm saying it's a much easier way of doing it is because if we hit on James Taylor, for instance, that's where he's working, that's his name, that's his annual salary. You can see every single month is then split out by the monthly salary that he's given. And it means that if they're on furlough, if a client's not topping up, so for instance, the furlough scheme will go through things like, well, are you topping up or are you not? Furlough only covers 80% of the salary up to £2,500. Some employers are topping up so that they're getting 100% of the salary, some aren't, so that's even taken into consideration, as well as the furlough payments back from HMRC. And again, of course, as staff members, if they're on sick, if they have the virus, for instance, or if they're not well, then again, it's much easier for you, rather than just doing, whole salary /12. Doing it month by month means that you can be responsive and your clients can be responsive, because of course you can take your clients through this process so that they absolutely understand what's being built and why, so that they can then use this as a working forecast going forward. If you've done the work, you may as well benefit from it afterwards. And then it, of course, will give you an opportunity next month to see how they're tracking and so on and so forth. So it really does give you this opportunity to start those conversations and ensure that you've got these impact meetings that you're having with your clients. What I have done is made sure that I've gone through, so you'll have a link in the PDF to the government's tax service site. This will, the whole purpose for this, you're not going to be creating, I'm going to be completely upfront, you're not going to have full payroll journals from this. That's not the purpose of this. The purpose is to understand the cash impact. So what's the staff member getting and what is HMRC getting? This table and this link here will give you the breakdown for the percentage that's going to the staff and the percentage that goes to HMRC. If you look at just down at the bottom here, you can see that in this case, on a 30k salary, if we look at this row here, you can see that the staff will get 80% of it, and then the HMRC would get 20%. That 20% covers PAYE and employees' national insurance. Employers' national insurance and the pension contributions are both in the appropriate accounts. And again, the video will go through calculating those things automatically as well. In this instance, and again, the video goes through it, I said, store it on the 25th or, whatever day that the payroll's usually paid. And then on day 0, which will be the staff payment, 80% will be received. Day 27, which would be, typically when you're paying HMRC, the further 20% will be received. So you're getting those inflection points from a cash flow perspective, because all of this is about affordability and cash. So those things are then happening pretty accurately. Other things that will be covered, again, I mentioned the furlough side of things, corporation tax liability, assuming time to pay there. It will also go through how to create corporation tax payments for the future years coming as well. Hospitality, retail, leisure and rates relief with the rateable values of 15 to 51k. So assuming business rates at 0 for 12 months and then adding in the 25k free grant for those companies, that's covered. Rates relief and all of the other businesses, how to post the statutory sick pay, and then a guide really to just help handhold with you and your clients as to the kind of questions that you both need to go through to get the actual trading piece of it done. So my recommendation is that all of the adjustments are made first, and then you literally will go up to the top and you start at the top and work through revenue first, cost of sales. I've given some within the guide. It teaches you how to use, formula methods, for instance, for accounts that have dependencies on other things, so that you've got this really, brilliant flexing forecast going forward. It will then take you through to how you're actually going to export it. So you're going to create the information. So what we want to do is make sure that you've got your management information in there as well. Now you may well have that from zero, but you can do it all in Futrli. So you'll be guided through creating a profit and loss, balance sheet, and cash flow reports, starting in the 30th of April 2018 to get all of the actual data in there, which will then look all the way through to the end of 2023. So you've got all of that information in one place, which of course for the underwriters is going to provide a very compelling, easy way for them to see the information, because all of this is about creating that taking away as many barriers as possible and making things difficult for them. So in this instance, you've got that full profit and loss balance sheet and cash flow for 5 years, 2 years historical, 3 years into the future. Every single one of the forecast lines you've created, I've recommended that every account is opened so that it's very easy, again, for the underwriter to see. So if we look at the current liabilities, for instance, and open up the VAT, they'll be able to see the COVID VAT deferment, etc., etc. So all of those assumptions will be listed by name, so that it's, again, very easy for the lender to understand exactly what's happening. I've recommended that you export them to Excel. Why? Because if there's further annotations that you need to make around your assumptions, you can do by inserting a column. Again, it's in the video. But inserting a column and then writing any specific assumptions that you need to make. For instance, October, we're taking on 3 more staff, or something along those lines, because we're expecting trading to do X, Y, Z. So that's, a quick whistle guide run through of it. Like I say, the video is 45 minutes long. You only need to watch it once, but you've got the guide there that you can print off and everything. We've tried to do everything that we can to make sure that you've got no bumps in the road when you're going through this process. Okay, so I'm going to stop the share.
Well, I go back to questions. I've got a few questions around costs. So, we'll come to Swoop first, because a few people have asked how much Swoop costs. So we'll start there. You're muted, Andrea.
It's, I think that must be the most common sentence we've all heard over the last 3 weeks. You're muted. Yeah. Did you know you're on mute? We're free to use. So we have arrangements with all of the banks, because we're already integrated with them and have always been sending them loans as business as usual. Because we're doing half the heavy lifting for them, they pay us an arrangement fee. So we're free to use. The point is, we're trying to make this accessible to every single business that's out there.
Okay, look, and a quick answer for us, Hannah.
Yes, that's right. Katie's asked, do banks require a forecast for the next 3 years? I mean, the advice from you, Andrea, is yes, they do. It will absolutely help the decision-making process, and yet absolutely try and get these next 6 months, well, since March, these, I would recommend probably until August, that you've got, Corona impacted business trading is very, very clear in the forecast that we go through in the video. I've assumed it's a hospitality business, so I've got no revenue at all for a few months. And the same with the furlough in the staff. You can see all of those things are happening, but then you need that, you need to be able to awaken, and you need to be able to show that affordability for the loan going forward. So it does need to be a going concern, of course. Sorry, it's Swoop funding, guys, the link, but you're going to get all of this information. Don't worry about it.
There will be an email in your inbox in the next hour, which has got all the information on. Can partnerships apply, or is it limited companies only? Andrea, question.
Yes, I believe as of earlier, it was LLPs as well as limited companies. Also, sole traders can apply. Yeah. Which Absolutely. Is important, because in previous schemes that would not have been the case. So sole traders can also apply, the rule being as long as they are trading from a business bank account.
Okay, brilliant. There's some questions around support with Futrli. Look, just a quick answer to that one. The help by step-by-step guide should give you all the support you need, but of course we can support you guys through this as we're trying to do with information. We will of course support you on a need-by-need basis as our partners.
And also, so our online support guys, I mean, you have the information that you need. My email's there as well, but I mean, not that I'm here as customer support, but our customer support guys have been trained on this as well, so they know what the guide is. They'll know what you're talking about if you're getting stuck on something. I genuinely don't believe that you will get stuck on anything, because we've covered it in great detail and the whys and wherefores behind it. But if you do, our online support guys will be able to help out for sure. And of course, if it's on the lending side of things, obviously Andrea's team at Swoop.
Yeah.
Yes, every customer gets their own advisor. So if you get stuck, you don't understand what the terms are, you want to know, is this the right decision? Every single person gets an advisor every single morning. Our advisors get the most up-to-date market intelligence, so as well as the technology telling them the results, they also have the human aspect as well. And also to say, on the platform, we do a second job. We match you to the funding. We're also identifying areas of cost savings. So things like utilities, water, gas, all of these things that our customers are still having to pay. Just to give you a quick nugget on that, because you've got your data done, you've got all the hard work done. So always trying to improve that affordability ratio. At the moment, energy prices are really low, and we're locking in for clients, so we're saving between 30 and 50% on those cost items, again, to improve the affordability. You don't have to do anything other than just upload the information to Swoop. We do the rest and then notify you with what the results are, and help you manage everything through the process, so you're not trying to navigate it on your own.
Brilliant. Hannah, a question to you really. I've had a few in where to start. Start with Swoop or start with Futrli. Do you want to take that one on?
So for me, this is a jam sandwich. We're the jam in the middle and Swoop's the bread. So you're going to start with your opening up your application. We've kind of said in the what happens next, you do need to go through a client triage process first. You've got some work to do there. You're also going to be getting a white paper that we put together. Some of you might already have it. If you haven't, you're going to get a white paper with simple tactical process to be able to do that first. So, in this time where you're potentially feeling overwhelmed, we've got a simple way for you to attack this. And then to be able to, of course, track those, client contact points and the CBILS stages, mobilize your team for that. This is not about you shouldering all of the responsibility. So I would say that you need to get your clients set up, get them connected to Swoop, get them connected to Futrli, get your forecast built and made, because you're going to get some of the affordability side of things and the potential loan presented, so you'll know exactly what interest rates to use and so on and so forth. Then get your forecast created, and then you're going to be uploading it. So you're kind of going to get to one point with Swoop where you have to stop. You've got to create the forecast, then you get it uploaded. That's it, and then of course you've got the forecast, as well as any management reporting KPIs that client needs for you to be able to track with them going forward. So you're getting two birds, one stone. You're going to help fund them, and you're going to help them, manage their business and know that they're okay going into the future.
Okay, good. Questions for you. There's a few questions around this. The Swoop application process, is it purely for CBILS, or can other loans, overdrafts, finance options be provided through the application?
Yes, it's not just purely for CBILS. Obviously, CBILS gets first preference because that's the one with no PGs, best interest rates, etc. But no, it's open to the usual market as well. And believe it or not, some lenders are very active at the moment. They've been well funded by their institutional funding, so they're highly active. We're also expecting announcements today on an increase in the number of lenders. So I think some alternative finance lenders will become accredited, and then that will open up. You can go to them first rather than having to go to your bank. And so yes, all the other options will be available, and we're constantly updating them every day just so that we're up to speed on who's lending, who's not. So yes, it won't be just CBILS, but CBILS will be the first port of call because that's going to be the best facility for your business owner.
Couple of questions about regions that you do cover, specifically Northern Ireland. That's come up a few times. Do you?
Yes, Northern Ireland. Yes, we already have quite a few customers from Northern.
Well, if you weren't supporting any of Ireland, Andrea, frankly.
There was also a question of Welsh one as well. I've just found it. Welsh businesses better off going through CBILS, or should they approach the Development Bank of Wales first?
I'll take Northern Ireland first. Yes, we are active in Northern Ireland. It's important because First Trust aren't in the CBILS scheme, and Danske are saying that they're only looking after their own customers. So we have one, for example, at the moment in Belfast that we are actually approaching the non-bank lenders with, and also we've sent it to Barclays because it's a great business. So Barclays are looking at opening an account. So yes, absolutely open to Northern Ireland. Also open to Wales. Wales, you're lucky, you get additional funding. So I would be going for both if I were you. And again, the point being, so Wales announced an extra 100 million over and above what the government had announced so far. Again, they've just announced it. Sometimes it can take time to get the process in place. We actually do work with the Welsh Development Bank. So as soon as that process is defined, it'll be live on the Swoop platform as well. What you do is when you join Swoop, the first question is your client's company name. From that, then we derive, where it's located. So any grants that are available in that location will show up, as well as what loans are available. We also then, so we pull all the data from Companies House so that we can extract other key questions that the lenders will have. For example, does the business already have a charge? Are there other facilities in place, etc. So any other sort of periphery items that the lenders may ask for, we try and extract that from the data sources rather than you having to go and chase your client for it. Most of it's available between Futrli, the bank accounts, and Companies House. So yes is the answer.
Okay, good. There's a few questions on how you guys as accountants should charge for this. Hannah, do you want to take that one, or do you want me to take it?
Thanks for passing.
I don't mind taking it. I can take it if you want.
Go ahead.
My answer to this is unknown territory at the moment, of course. So we've got nobody to go off. A lot of our firms are looking at the current situation as a client retention period, and it's about protecting their portfolios. So I'm not saying that things should be done for free. However, there are processes like the Futrli Swoop process, which will enable you to do this relatively simple at scale. And I would allocate any cost implications initially to you protecting your client base, because this is about getting your businesses through this, because ultimately they are your business. That's our initial feedback. That's what our clients are saying. Pam, anything else to add?
Well, I mean, I think you've got to think imaginatively about it. At the same, this isn't an opportunity to rinse your clients. No one's saying that, at all. But if there are successful applications and they do get funding, then potentially a percentage of successful outcomes. Those sorts of are the sorts of things I would be thinking about. I'd also be making sure, we've kind of said this on this slide, that this isn't just about you. It's about training your younger members of staff to be able to do this, so that you're doing this properly at scale, and it's not just for your larger small businesses. It is the one-man bands as well. It's those clients that you haven't necessarily got the most amount of contact with, that it's massively important that you really setting yourself a target for the month of April, that every single client has been spoken to, and not emailed, spoken to, so that you absolutely understand exactly how they're what position that they're in, if they're okay or if they're not okay. They've got families who are depending on all of this, and just knowing that you're behind them and supporting them, you can't imagine the positive impact that will have on any small business owner. So alone helping them with the CBILS application.
Actually just deferring the fees, which to come to your point, it makes total sense, and I think that's probably the mindset a lot of them are in anyway.
Absolutely.
Oh, there's so many questions. I think
I know, we're never going to cover them in the next 45 seconds.
I was going to say, what I'm tempted to do is I will pull these together into frequently asked question type document, and then we will put the answers underneath them and we will share them out. That probably won't go into the email you're all about to receive shortly, because it'll be me doing it. So the first email you'll get will be the documents we've referred to in this. It will be, I know many of you have requested the slides, and then we will follow up over the coming days with additional content for you. And this is an ever moving world. So as Andrea says, we will absolutely be at the forefront of it, and we will share any changes with you almost immediately.
And let us know if you want us to do this via webinar again. It's an hour of our day, you know, it can even be half an hour, but it's just as things are changing and moving, just contact us and let us know. Okay.
Yeah. Okie dokes. Well, we will mute now and stop our videos, and we'll let you all go off